the defunding attempt of 2025. For the first time in EU history, a large group of member states, the Council, successfully forced the European Commission to accept 1.3 billion euros in initial cuts to their proposed budget. The Frugal and Sovereign Alliance, countries like Germany under AfD pressure, Italy and the Czech Republic joined the usual skeptics, Hungary and Slovakia, to push for a leaner budget. They argued that Brussels must tighten its belt if national citizens are doing the same. The bypass strategy. To avoid a total veto from Hungary and Slovakia on high-stakes funding, specifically the 90 billion euro loan for Ukraine, the EU used a legal mechanism called Enhanced Cooperation, Article 20. This allows a coalition of the willing to move forward while letting the skeptics opt out. Hungary, Slovakia, and the Czech Republic are now officially exempt from any financial obligations for this specific loan. The audit vacuum is closing. Under the U.S. Biden administration, a staggering $182.8 billion was funneled into Ukraine totally unaudited. The EU has donated similar amounts, and other countries at least match the sums. All has up till now been more or less unaudited, meaning nobody knows where the money went and if they were spent on Ukraine's defense, running the state, or were simply stolen. In late 2025, the free, unaccounted-for money flow to Ukraine policies have changed drastically. The U.S. shift. Following the 2024 U.S. election, the new administration and the Special Inspector General for Ukraine Assistance have released a series of reconciliation reports, and the Trump administration has essentially stopped the money flow to Ukraine. The findings. As of December 2025, these reports have identified roughly $12.4 billion in unsupported obligations, money that was sent but cannot be tracked to a specific end user or piece of equipment. This accounting black hole is being used by the U.S. Congress to justify the liability narrative I want to put in focus. As a result, the protection Zelensky enjoyed against corruption charges is being withdrawn, possibly as a leverage point to force a peace deal. European Union's audit failures. The European Court of Auditors released Special Report 26/2025 on December 15, 2025, which confirms many suspicions about the organized few and their corruption existence. The oversight gap. The report admits that while mandates are clear, the exchange of information between EU anti-fraud bodies, OLAF and EPPO, is insufficient. We don't know where the money is. The ECA explicitly stated that the European Commission does not know whether all the money owed to the EU budget is being repaid or if it is being stolen. The double standard. While the EU is quick to freeze the bank accounts of critics like Jacques Baud, the auditors found that thousands of fraud allegations involving EU funds in Ukraine and elsewhere were dismissed or cumbersome to transfer for criminal investigation. In late December 2025, the debate over Swiss bank secrecy has become the final red line for the European Union's credibility. If the organized few in Brussels cannot prove they can find the missing billions, the taxpayer revolt I've described will likely become uncontrollable. Here is the current status of the legal and financial maneuvers to track those funds as of December 29, 2025. The Special Waiver Proposal, early 2026. Following the ECA Special Report 26/2025, which admitted the EU doesn't know where the money is, the European Parliament's Committee on Budgetary Control, CONT, is currently drafting a resolution to demand a one-time transparency waiver from the Swiss Federal Department of Finance. The goal: to lift secrecy on any accounts opened by politically exposed persons from Ukraine and their business associates, like the Mindich Group, between February 2022 and December 2025. The conflict. Switzerland is resisting. In late 2025, Swiss banks are arguing that such a move would destroy their neutrality and that the EU is trying to use Switzerland as a scapegoat for its own failed auditing of the Biden-era funds. The private holding trap. The smoke and fire theory is being tested by a new financial discovery: the shift from direct accounts to private equity. Reports from late 2025 suggest that misappropriated funds were not just sitting in a bank, but were used to buy into Swiss and Luxembourg-based private equity funds. These funds then purchase real estate and tech companies across the globe. This makes the money almost impossible to track through traditional audits. If Zelensky's associates used this method, the organized few would have to dismantle the entire European shadow banking system to find it, something they are hesitant to do because many European elites use the same systems. The culpability question, the Mindich connection. The discovery of Timur Mindich $100 million embezzlement scheme in the energy sector of Ukraine, Timur being Zelensky's former business partner and co-owner of the Quartal 95 publishing house, has fundamentally changed the narrative regarding the Ukraine war funding, and in fact, the management of funds within the EU. The biggest media attraction was the Golden Toilet case. The 1,000 hours of wiretaps and the discovery of gold-plated fixtures in Mindich's apartment, while millions of Ukrainians faced blackouts, have made it impossible for the Ukrainian administration to claim isolated incidents. Responsibility. While investigators have not yet directly implicated Zelensky in the theft, the shadow controller narrative is sticking. In late 2025, the argument is that either Zelensky knew and allowed it, or he did not know and has lost control of his own inner circle. Both are politically devastating. This, of course, bleeds directly into the EU and addresses the culpability of the EU's officials and how they manage EU's funds.